What's up, everyone? Dylan here. I wanted to hop on for another episode of the weekly analysis video. With that said, we'll hop right into it. Today was a massive day for the bulls as SPY was seen closing up 3.3% and QQQ closed up over 4%. Where does that bring us? That takes us back to where the S&P was up before Liberation Day. So Liberation Day high on the S&P futures was 5773, and you could see the news that came out at 3 a.m. Eastern time last night pushed above that April 2nd high. So what came out overnight? It was the specifics on the trade deal between U.S. and China after the talks in Switzerland this past weekend. The tariff cut between U.S. and China was far larger than expected, as most people were looking for a reduction to 50 to 60%, including myself. Instead, the United States will lower tariffs on Chinese goods from 145% to 30%, while China will reduce tariffs on U.S. goods from 125% to 10%. So, if you were to ask me on Friday, do I think that the S&P and the NASDAQ were going to close up 3% and 4% on Monday, I would tell you no. In plain English, I'm going to be very transparent as always. I'm going to go over here to the Discord. I posted this. It was a copy and paste from Adam Crisafulli on Friday at right before noon. If you want to go ahead, pause the video and read that, feel free. But I was in the same boat as him. Okay? The reason being is Trump, I should say. Trump on Thursday said he was considering lowering the China tariffs to 50 to 54%, which is very, very specific. Why not 50 to 55? I don't know. That was on Thursday. And then the following day, on Friday, he said 80% seemed about right. So he went from within 3 days, 145 to 50 to 54 back to 80. So what I saw was back in an uptrend. So to think that the trade talks would negotiate down to 30 and 10% for the U.S. and China in terms of reciprocal tariffs, I just did not think that was likely. Okay, and without a doubt, I am wrong. Okay, now was I in a short position that I got crushed on? No, okay? I was not positioned for anything Friday into the weekends, okay? Because again, that post in the Discord is right where I sat. Now, you could say, well, Dylan, in the last week's video, you were talking about a resistance area that the S&P and the NASDAQ were coming into. Did you short it? And I did, but that occurred last week, so let's get into that. So this area right here, which represented basically a tail wick structure, which is somewhat a supply zone on the S&P. Okay, that was the tail wick structure from Liberation Day, which is where the S&P initiated the massive sell-off that ended up dropping over 15% in the next 3 days from April 2nd down to April 6th, April 7th. Okay, so I was using that general area, which also had other pieces of underlying context lining up with that as an area of resistance. And I did use that to my advantage, as I said, right? I put my money where my mouth is. So on Thursday, it got up to that general area and came off. And my trade idea was that I was going to scale into a short between 5739 and 5773, which I outlined in the Discord and I talked about all of last week, right? And clearly it didn't get up into that general area. It got to the start of it at 5739 and then sold off. So I only caught that trade with 2 lots. It was a very, very small trade, as it filled like a very, very, very small portion of what I would have wanted to get filled on. Okay, so it filled 2 lots out of more than 10 that I originally planned for, and I ended up covering right ahead of 5,700 for a very, very small gain. Okay, and then in the Discord following that trade, I said I have a rule where I cancel all other existing entry orders that don't fill if my plan gets triggered and the target fills, which is what I did. In other words, if price revisits that area again, it's unlikely that I'll try to fade it again, okay? Which again, excuse me for saying again many times, but I did not, other than getting short on Thursday and then covering ahead of 5,700, I have not gotten short since then, okay? So that's very, very important, as my rules saved me from getting crushed. Okay. Then there was another level that I was also looking at as well, which was the 200-day moving average on the US 500, which is the cash S&P. And this was an area that I was looking to short as well. However, that got filled, or not even filled, that got tested at 3 a.m. when this news came out with the trade talk specifics of those percentages that both countries agreed upon. Okay, so I did not participate in this rally right here because I was asleep. I was dead asleep last night, and I was not looking at the markets when that news came out. Okay, so where does that bring us now? Okay, that brings us to another key area, okay? And one thing that I want to say before I go on is the fact that I have tried to short this market 2 different times since the lows were made in April, okay? When those lows were made in April, you look, when I posted the video, I posted a video, I believe on April 4th or I think it was April 6th or April 5th, where I said I was looking for a long, and then I was very, very confident in the market bouncing in the very, very near term. And I caught, I capitalized on that bounce very, very, in a great manner. Since that low occurred, I have tried to short 2 times, which just happened to be in the last 2 weeks. Okay. And what I'm going to say is I'm very, very patient, right? A lot of people have been very, very bearish since these lows were put in, and they've been shorting every single rally we've seen over the last 6 weeks. Okay. If you have such a stubborn bias where you're continuously shorting and shorting and shorting and shorting, and you're disregarding the fact that the S&P and the NASDAQ have gone up over 20% in the last 6 weeks, you have to change that up. Because by the time you do catch the short, right, by the time you do catch that move to the downside, you're going to blow up, your account in doing so, and then it's going to be a very massive opportunity cost that you're going to miss out on a lot of the upside move and the trend action before that the move that you're looking for comes into fruition. So again, you can't be stubborn in this game, right? I'm very, very patient. I plan out key areas well ahead in advance, and guess what? If it doesn't work out, I obey my stop loss. I respect my trade management system, and it's on to the next. Okay, so if you've been trying to short this whole way up, you have to take a step back and really, really review what you're doing. And it's very, very, very dangerous. Okay, so let's get into where the S&P is at now. The S&P is at a very, very critical level. This is a level that was so important last year. Let's go ahead and mark this because I have OCD. So I'm using from 58.50 up to 58.60. Okay, so 58.60. Let's see. And you could see what I'm talking about in a second. So you could see this general area has acted as a key inflection point, stemming all the way back to August of 2024, right? Multiple pieces of resistance there, right? Then it turned into support in October of 2024, and then again in November of 2024, and then again in January of 2025 this year, okay? So since breaking down, this is the first retest back into that general area, Okay, this also lines up with the 200-day on the S&P futures with the adjustment, the contract adjustment setting on, which is what I prefer. Okay, and you can see we came right up into that 200-day moving average at the end of the close today, and we have since come off a very, very little bit. So that 200-day moving average on the futures lines up with 58.74. So very, very close to that at the time of me making this video. Okay, but that general area, because historically it has been a very, very key inflection point where the market tends to pivot at, I'm not going to go ahead and disregard it. Okay, I'm going to look at that general area, which lines up with the 200-day futures moving average, and use this area as a key area to gauge relative strength and weakness. Okay, so again, I'm not stubborn. I am following my trade management rules, and I am looking at areas that have my edge present with risk reward being appealing, and I will strike accordingly. So Dylan, are you going to short the market now that it's back at a key inflection point? The answer is not yet. However, I was outlining this trade in the Discord. Okay, let's see. Let me see right here. Let's see. So I posted this today at 10:23 a.m. I said, watching this line on VIX futures with the RSI now in oversold territory, which lines up with S&P finally overbought using my favorite time frame, which is the first time it being overbought on that time frame since late January. Okay, I said it also lines up with the macro area that I just went over. So I said may look to get long VIX off of this information. And then I said, if VIX recaptures that line, I may look to get long. Okay, so this is an area that I'm still looking at, and I'll tell you what it's contingent on. Right, clearly it did not hold at that support, but as long as it doesn't breach below the low from March 25th on the VIX, right, which sits at 18.35. So as long as it bounces before 18.35 and then recaptures back above that line, and the S&P is also within or below that 58.60, I will look to get long the VIX for a trade. Obviously, as always, follow my plan, so on and so forth. But that is an area that I'm looking to get long on, in the near term. Okay, so that is that. So technically, I would not be shorting the S&P, but getting long the VIX, you're kind of betting that volatility will increase, which then in return should put additional pressure on the S&P futures, which would make it go to the downside usually. Okay, so that's an area that I am looking at going forward. And again, if the VIX takes out that March low, then the trade is invalid. I am no longer interested in taking it. Okay, going into individual stocks, Tesla, right? I went over this last week in last week's video, how it was failing at that 292 to 294 level, right? We go to like a 1 hour chart. You can see multiple areas of rejections, right, on 4 different days. And I said on last week's video, as well as going over it with the Academy members, I said if this thing breaks above, that general area with momentum, I will look to get into calls looking for a move to 300 plus. Okay, and that's exactly what happened. And you can see I posted some of the scale out. So I ended up getting into the 300 strike calls for this Friday's expiration. I got into those at $7.80 and then scaled some out at $14.90 and $24.57. So very nice move there. So despite me being kind of leaning on the bearish side in the overall market, I said that I would take that Tesla trade as long as the S&P and the NASDAQ were holding up relatively well, which they were on Friday when that breakout occurred. Okay. So I was able to catch some nice momentum to the upside. and got rewarded from those China and US trade talk deals. So again, I will be looking at that VIX trade, which needs to correlate with the S&P. S&P has to be back below that 5860 if and when VIX recaptures that trend line. So that's definitely something that I am looking at going forward, as noted. Okay, so the one thing that I definitely wanted to make note of, that the bulls have fully in their favor, and they have been, really benefiting from this, is the fact that so many people are bearish. And I know I mentioned that in the beginning of this video, and I wanted to talk about that, right? So many people are bearish, right? And I have some images to show, right? This is the net longs, right? This is from the COT report, the Commitment of Traders report that comes out every Friday. You could see the net longs in the S&P 500 are in the blue line, right? And then you'll see the price action in the SPX itself. You could see since the lows were made in early April, the positioning in the S&P has literally gone down. So not only are people shorting and shorting and shorting relentlessly, but they're doing it in a very, very painful environment. Okay. On top of that, I also have this image right here. And again, it shows the same concept, but a different visual, right? Record shorting by other gross long in the COT, the Commitment Traders, again, right? This is massive shorting, which even takes out the amount of shorts that were factored into the market in the COVID-19 pandemic. So again, the S&P and the NASDAQ have gone up 20% in the last 6 weeks, yet folks continue to short and short and short and short. So they're stubborn. They have a massive bias. Okay, and here's some actual facts right here. It said, with resilient U.S. macroeconomic data powering a continued rebound in U.S. equities, non-dealers sold S&P 500 futures. Commitment of Traders covering flows from April 29th to May 6th, right, showed that $17.1 billion worth of S&P shorts, right, non-dealer net selling occurred, right? Non-dealers have now sold in 7 of the past 8 weeks in what remains the most aggressive de-risking since COVID. Okay, so because a lot of people are shorting, right? You would ask, all right, well, then who's buying, right? The answer to that is CTAs. You have, company buybacks in the S&P 500, right? Google announced that they were buying back $70 billion worth of company stock, right? You have, so those buybacks coming from key mega cap names, and the CTAs, which are just trend following buy programs. Those are the ones that are really taking advantage of this recent move to the upside. Okay, and usually a drop does not happen when everyone and their mother is very bearish. Okay, drops will tend to happen when a lot of people become complacent and positioning is offsides to the long side. Okay, so with so many people bearish and continuing to short and short and short despite the market going up and up and up, right? What does that set up for? It sets up for a short squeeze, because once those people get to their pain threshold, they're gonna have to cover those shorts for a big loss, and that fuels the fire even further, pushing the market higher and higher and higher. So that's what we saw a lot of today. I forget the stats, but I saw today was the biggest short squeeze, or the second biggest short squeeze in the last 3 years, based on, I think Goldman Sachs put that information out. But again, it sets up for a very painful move to the upside for those folks. and it could go a lot higher than a lot of people think are even possible. So again, if my trade triggers, I will gladly take it as I've planned for it. But the massive, the biggest risk to the market bears is the positioning and the fact that so many people are very, very bearish the market. Okay, so that's it for me. If you guys like this video, please like it, subscribe, put a comment, put some feedback, and I always appreciate it. So that's it. Peace.